Market momentum is shifting gears, and the numbers are telling a surprising story. For the first time in years, the S&P 500 is on the cusp of a fourth consecutive positive quarter, a streak not seen since 2021. But what's driving this sudden turnaround? Taking a closer look at the top 5 stocks that have led the charge and the surprising common thread among them: a shift away from tech and into sectors that are poised to benefit from a strengthening economy and a housing market on the rise. As I analyze the market turnaround, I'm struck by the sudden shift in momentum. Just a few months ago, the market was in the midst of a global sell-off, with fears of a U.S. recession intensifying. Now, the S&P 500 is on the doorstep of its fourth positive quarter in a row, the longest such streak since 2021. This is a remarkable turnaround, and one that has left many investors wondering what's driving it. Key factor is the interest rate cuts made by the Federal Reserve. By lowering interest rates, the Fed is making borrowing cheaper and more attractive, which can stimulate economic growth. This in turn can boost the stock market. I believe that the Fed's decision to cut interest rates has been a major contributor to the market's turnaround. Another factor is the housing market stimulus. The proposed move by Freddie Mac to unlock home equity through secondary mortgages is a significant development. This could lead to a surge in home purchases and renovations, which would be a boon for the housing market and related sectors. And I think that this move has the potential to drive growth and innovation in the housing market. Now let's take a closer look at the top performing stocks that have led the market turnaround. Stanley Black & Decker, Starbucks, GE, Healthcare, Home Depot, and Best Buy have all seen significant gains. What's driving their performance? In the case of Stanley Black & Decker, it's the company's exposure to the housing market and its related sectors that, as interest rates fall and the housing market heats up, Stanley Black & Decker's tools and equipment are in high demand. Starbucks, on the other hand, has seen a significant boost from its new CEO, Brian Niccol. Niccol has a track record of turning around struggling companies, and his leadership has already begun to pay off. Starbucks stock has surged as investors bet on Niccol's ability to drive growth and innovation. GE Healthcare is another under-the-radar performer that has seen significant gains. The company's exposure to the healthcare sector and its related industries has made it a beneficiary of the market's turnaround. But I believe that GE Healthcare's performance is a testament to the company's ability to adapt and innovate in a rapidly changing market. Now, let's talk about the generative AI boom and its decline. That I believe that the hype surrounding generative AI has led to overinvestment and unrealistic expectations. The technology has the potential to revolutionize numerous industries. Its current limitations and unreliability may hinder its widespread adoption. And today I think that the decline of the generative AI boom is a cautionary tale about the dangers of hype and overinvestment in emerging technologies. Barming said, as I analyze the economic policy trends, I'm struck by the potential for a broader shift in economic policy. The Federal Reserve's decision to lower interest rates and the proposed move by Freddie Mac to unlock home equity through secondary mortgages suggest a desire to stimulate economic growth. That this shift in economic policy could have significant implications for the tech industry and beyond. In terms of investing in portfolio management, I believe that the market turnaround presents both opportunities and challenges. On the one hand, the market surge has created new opportunities for investors to buy into undervalued stocks. On the other hand, the market's volatility and unpredictability make it essential for investors to be cautious and diversified. Finally, let's talk about innovation and adaptability in the tech industry. I believe that the market's turnaround is a testament to the importance of innovation and adaptability in driving growth and success. Companies that are able to adapt to changing market conditions and innovate in response to new trends and technologies are likely to thrive in the long term. In conclusion, the market turnaround is a complex and multifaceted phenomenon that is driven by a range of factors, including interest rate cuts, housing market stimulus, and the performance of top-performing stocks. I believe that the market's turnaround presents both opportunities and challenges for investors, and that companies that are able to innovate and adapt in response to changing market conditions are likely to thrive in the long term. Quote, as we conclude our analysis of the market turnaround, I'd like to highlight some investing strategies
that are suggested by this story.
The key takeaway is the importance of diversification and risk management. The market's volatility and unpredictability, it's essential to have a diversified portfolio that includes a mix of stocks, bonds, and other assets. This can help to mitigate risk and ensure that your investments are aligned with your financial goals. Another strategy is to focus on companies that are exposed to the housing market and related sectors. But as we've seen, companies like Stanley Black & Decker and Home Depot have benefited from the housing market's turnaround. This suggests that investors may want to consider companies that are well positioned to benefit from the housing market's growth. Additionally, the story highlights the importance of innovation and adaptability in driving growth and success. Companies that are able to innovate and adapt in response to changing market conditions are likely to thrive in the long term. This suggests that investors may want to consider companies that are investing in research and development and that are positioned to benefit from emerging trends and technologies. Finally, the story suggests that investors may want to consider a long-term perspective when investing in the market. By market volatility and unpredictability can be unsettling, it's essential to remember that the market has historically trended upward over the long term. This suggests that investors may want to consider a buy and hold strategy rather than trying to time the market or make quick profits. The market expense. In conclusion, the market turnaround is a complex and multifaceted phenomenon that is driven by a range of factors. By understanding these factors and developing a solid investing strategy, investors can position themselves for success in the long term. That's all for today's episode of NewsPod AI from Big Blue Ceiling. Thank you for joining me on this journey through the world of finance and technology. If you have any questions or comments, please don't hesitate to reach out. Till next time, stay informed and stay ahead of the curve.